Hey, this is Trey Martin, Director of Sales at Innovator ETFs. I'm joined by Tom O'Shea, our Director of Investment Strategy. Tom's going to talk about some of our core themes in our 2023 investment outlook. The outlook outlines our expectations for the financial markets heading into next year and also talks about how to position clients for success with all the uncertainty lying ahead. Tom, one of our key themes for next year is lower, no longer. Can you describe what that is and also why it's so important for investors heading into next year?
Definitely, Trey. Lower no longer refers to our expectations for interest rates to remain elevated in 2023. Although inflation is heading in the right direction, we're still a long way away before it hits the Fed's 2% target. We still have a tight labor market and strong wage growth, which will challenge the Fed next year as they continue to tighten monetary policy.
Is there a chance the Fed cuts rates next year?
Well, anything's possible, but the Fed is very aware of what has happened in the 1970s, and we don't think they want to repeat those mistakes. In the 1970s, the Fed officials cut rates too soon, and we saw a resurgence in inflation. So looking forward, we expect them to rise rates to about 5.25% and wait until economic data responds. Another factor that's keeping interest rates potentially elevated next year is quantitative tightening. So following the global financial crisis, we had quantitative easing where the Fed purchased assets and were artificially holding interest rates lower. We now have the potential for about $60 billion of assets rolling off the balance sheet. There's a potential for a shift in supply and demand dynamics in the treasury market, which will support rates.
So given the higher rate environment that we're in, how should investors position their portfolios for the most success heading into 2023?
Well, we're seeing the widest dispersion of S&P 500 targets by Wall Street firms since 2009. Our research group believes that we'll have muted returns in the equity markets, but regardless, advisors need to have risk management in the focal point. They need to be in solutions that allow for upside participation, but downside protection as well.
So essentially investments that can cover your downside while still maintaining participation on the upside. One of the funds that we highlight in our 2023 investment outlook is PJAN, P-J-A-N. This fund seeks to offer a 15% buffer against losses while allowing you to participate to the upside of SPY 1-to-1 to a predetermined cap. Are there any funds in our lineup other than PJAN that clients should keep in mind heading into 2023?
Definitely. Another fund we highlight is SFLOR, or SFLR. SFLOR targets a 10% floor and is meant to outperform during down markets while also maintaining pace during up markets.
Well, thanks for tuning in. To reference the full 2023 investment outlook, you can check out our website, innovatoretfs.com. And thanks, Tom, for joining us. We'll see you next time.
Thanks, Trey.
Before investing, carefully consider a fund's investment objectives, risks, charges, and expenses contained in the prospectus, available at innovatoretfs.com. Read carefully.